Happy Thursday out there, Team 42. It's your skipper here, Darius Dale, to present our macro minute for Thursday, October 19th, 2023. As always, we'll start with our executive summary from our leadoff morning note. If you want the analysis supporting these conclusions or what to do about them in your portfolio, obviously you need to be a client of 42 Macro. We'll start with number one, fresh highs for the nominal and real 10-year Treasury yields after Biden pledged at least $100 billion of support for Israel. That figure is roughly 9% of the year-to-date federal budget deficit, and suggests there continues to be limited appetite to take public debt reduction seriously in DC. Like their counterparts across the pond in the UK last fall, they will eventually be forced to by the Treasury market. Number two, crude oil is correcting from its recent rally as the U.S. eases sanctions on Venezuelan supply. This alleviates pressure on the U.S. to respond to energy supply concerns with the severely depleted strategic petroleum reserve, SPR. Recall that it was cut in half last year to just above low levels not seen since its inception in the early 1980s. With the U.S. already at peak crude oil production amid near peak efficiency, it was hard to see where the marginal barrel would come from in this round of geopolitical conflict. And lastly, number three, relief rally aside, inflation remains the top-down market regime. Inflation is a risk-off regime. Said simply, the path to a Santa Claus rally is being complicated by a myriad of cross-asset signals. That is not to say it can't or won't happen. Rather, it is to say the probability of it happening is lower than the probability of it happening. Transitioning to our cross-asset performance monitor here, we'll start with U.S. equity sector. So SPY down 0.7% on a week-over-week basis, being led to the downside by consumer discretionary here at minus 2.6%. We also have the consumer discretionary, the dotted lines, black dotted line here, if I can get my mouse hovered over it. Real estate down 2.4%. You got tech down 1.6%, and then bucking the trend here, you got consumer staples up 2.6%, energy up 3.9% week over week. Transition into equity factors, as I mentioned, SPY down 0.7%. A lot of dispersion amongst the factors. High beta and growth down 2% and 1.3% respectively. You got low beta up 1.1%. So clearly this is the market saying, hey, we no longer need or want these high beta growth exposures in the context of the backup we've seen in nominal real interest rates. Geographic performance, S&P down 0.7%. Most sectors most geographies are down with the exception of India up 0.2%, leading to the downside. We got China down 3.7%, and you got Eurozone and Japan roughly minus 2% respectively. Getting into the fixed income performance, core ag is down 1.4% week over week, leading to the downside by longer duration sectors in the fixed income market. TLT down 2.5%, LQD, MBB, that's investment grade credit, and mortgage-backed securities down about 2% apiece. Getting commodities are flat week over week. Currencies are flat week over week. The dollar is flat week over week. My apologies there. Swiss franc continues to best all currencies. The safe haven that the Swiss franc is continuing to uphold its safe haven status, up 1.2% on a week over week basis. And in terms of commodities, got commodities up 3% week over week, being led higher by crude oil up 5% and precious metals up 4.4%. So clearly the geopolitical trade being put on there. And then lastly, crypto. Investors are flocking into crypto on some of this ETF spoof news. Maybe there's somewhat of a safe haven bid here for some of the countries in the Middle Eastern region. We'll see if that develops and holds. But right now, you got Bitcoin up 6.6% week over week, dragging most crypto up on a week over week basis. Solana, the highest beta, at least the one I can tell is the highest beta from what I can see, is up about 10% on a week over week basis. And then lastly, transitioning to my Longbow dashboard here. In terms of global macro, the key macro market indicators, nothing really overbought or oversold from a range tree perspective. So we'll just leave you with some levels on the S&P. You got 42.91 to the downside, got 44.75 to the upside, kind of right there, smack dab in the middle of the range. So not much to do today in terms of actionable tactical trading pivots. We'll wrap it up there. Darius Dale presenting our macro minute for Thursday, October 19th, 2023. Check us out. I'll be on Real Vision hosting a daily briefing this afternoon at 4 p.m. Eastern. Definitely join us for that. That'll be a fun discussion with our friends over at Real Vision. And with that, everyone have a great day. We'll catch you back here tomorrow. Cheers.